Hello there. Welcome back to my channel. In this video, I want to look at the question paper of June 2025. So we are going to look at question two. So question two, we're given a picture of a KZN floods. So you need just need to go through the picture. And then we've got also information that we have beneath the picture, which is that the floods in KwaZulu-Natal have not only done a lot of damage, but also increased poverty that was already in existence. Most families lost their loved ones, who for some were their only hope out of poverty. So the first question is to define the term poverty. So we have poverty that we need to describe, and of course, looking at poverty, we can best describe it as lack of sufficient financial resources to meet a socially acceptable minimum standard of living. So if we have lack of sufficient financial resources to meet a minimum standard of living, you are under poverty. So basically, it's a state or condition in which an individual lacks the financial resources and essentials for a basic standard of living. So that's not the scenario that we have at poverty. Of course, we have got a brief description that we have, other section of poverty, whereby it reads a lack of material goods and money, which explains the same thing. Then we go to the next question, discuss how the death of a breadwinner could be the cause of poverty. So how the death of a breadwinner can be because of poverty. Of course, we have got a new term which we have, which is a breadwinner. So basically, a person who is a breadwinner is a person who earns money to support his or her own family. So if you are the only one who is supporting your own family, you are the breadwinner. So the breadwinner substantially supports the family financially. So that's not that way. So how can the death of a breadwinner lead to poverty? So this is very clear. It means there is no security if the breadwinner dies. So those are some of the points that we can raise. So within that context, we see that we have explanations that we have, whereby the first point is that the early death of the breadwinner in the family often leave families in precarious financial circumstances, which is actually uh, correct is the first point. And then social security payments to the family are seldom enough to cover the numerous debts for house, car, and furniture that are common among families with growing children. So basically, when the breadwinner dies, there won't be social security payments. So life insurance is becoming more popular again, and the issue of life insurance, and also this is what we have. So basically, these are the points that we will, of course, if you refer back to our question and to check in terms of the correct number of points, of course, our question has got 8 marks. And then if you refer back to our other section, I would see that on the last point, it is life insurance is becoming more popular, but workers' coverage is usually too small to do more or that cushion the initial shock caused by a death. So this is what we have in terms of that point. Then we go to 2.2, differentiate between each of the following terms. Of course, on the first part, we have got absolute poverty, relative poverty, and income poverty. So, looking at absolute poverty, it is severe deprivation of basic human needs. It means the person does not even have access to basic human needs, so it becomes absolute poverty. So these basic human needs that are being deprived under absolute poverty include food, safe drinking water, sanitation, health, shelter, and even education. So that's what we have under absolute poverty. So in terms of our explanation for absolute poverty measures poverty in relation to the amount of money necessary to meet basic needs, which is exactly within the context of our explanation. Then we go to relative poverty defines poverty in relation to the economic status of other members of the society. So basically, relative poverty, we are saying it is contextual, and that is fluctuating with the country's economic growth and wealth distribution. So we are saying native poverty depends with the economy, and it fluctuates depending on the country's economic growth and wealth distribution. So it means a relative poverty in country A is cannot be a relative poverty in country B. It depends with its economic growth and wealth distribution. So we are basically saying it measures an individual's financial standing in comparison to their peers in the same community. So that is relative poverty. Then we go to income poverty, refers to when a family's income fails to meet an established threshold that differs across countries. So this becomes income poverty. So with that, we move on to the next part whereby we call privatization and deregulation. But basically, privatization is the transfer of ownership from public ownership or state ownership to private individuals. So that is privatization. And deregulation is basically the removal of regulations or restrictions, particularly in the operating of businesses. So this is what we have, and with that we check in terms of the explanation that we have, whereby its privatization refers to the transfer of appropriate functions, activities, or property from the public to the private sector. And then if you check now on deregulation, it refers to the reduction in regulations or restrictions that could hinder free competition in the supply of goods or services. So it can be the removal or the reduction is indicated in our explanation. Of course, this is the reduction in regulations or restrictions. So we move on to the next part whereby we've got nationalization and affirmative action. So nationalization becomes the opposite of privatization, whereby now ownership is being transferred from private ownership to state ownership. So that's what we have. Then we check again in terms of the explanation that we have, whereby saying nationalization, the process whereby the state takes ownership and management of private enterprises. And then affirmative action ensures that suitable, qualified people from designated groups have equal opportunities in the workplace. So basically, affirmative action, it is a set of procedures are designed to eliminate unlawful discrimination. That is affirmative action. So we move on to the next part now, which is now time wage and piece wage. Of course, looking at time wage, it's a form of payment where an employee is compensated based on the amount of time they spend working. So that is now on time wage. So with the explanation that we are having, time wage refers to when an employee is rewarded according to the time wage or time spent to execute a quantity of work. So that is what we have. And then on piece wage now refers to when an employee is rewarded according to predetermined quantity of work that must be done. So basically based on the number of units. If it's a producing firm or a business, number of units produced. So we're saying on piece wage, workers are paid according to number of units that are produced. If it's a producing firm, so this is what we have on this part. And then moving on to the next question, which particularly becomes our question 2.3. So 2.3, reason name and explain four types of employment. Of course, we have got cyclical employment, I've got structural employment, frictional employment. Those are some of the types that we can include on that. Whereby the first one is cyclical employment, whereby we're saying during the down change in a business cycle, the decline in economic activities is accompanied by a decrease in the demand of labor. Cyclical unemployment is related to the cycle of fluctuation of the economy. So remember, the economy is characterized by cycles whereby we are going to have booms. Of course, these are going to be associated with high economic activity. And also, we are going to have recessions whereby the economic activities will be going down, reducing. So when the economic activities are decreasing, it also means the businesses or companies that we have are going to accommodate less workers. So that way, those that are going to be laid off under cyclical unemployment. So we go to now frictional unemployment is the result of normal conditions in the labor market where people move between different jobs and newcomers enter the labor market. So the time that a worker leaves one job and looking for another job, the time in between is part of frictional unemployment. Then we go to structural unemployment. Such as structural changes take place within the economy. So looking at structural unemployment, you would see that it results from industrial reorganization, typically due to technological change. So we are saying the technological changes are part of the main cause of structural changes. That is when we have got technological changes, we are going to the new technology that is coming in might need new knowledge and skills which might not be possessed by some of the workers. So those that do not possess those skills to operate those who operate with new technology are going to be obviously laid off and become unemployed. So it is a mismatch between the skill workers possess and the skills employers need, often due to technological changes. So basically, that's what we have under structural unemployment. Then we go to seasonal unemployment that depends on seasons. We are saying certain economic activities require more labor during a specific season of the year and less during the rest of the year. So this is what we have on the types of unemployment. Then you go to 4 causes of unemployment. So we are going to deduce the causes from the types. For example, seasonal unemployment, we are saying change in seasons become the causes. So when you look at structural unemployment, the cause will be technological changes. So those are the causes that we can raise. So within that context, we see that in terms of causes, the first point that we have. So the first point says prospective workers do not always ensure that their training and qualifications lead to employment. So this is a lack of the qualifications that are required. And then a decline in economic activity is a cause of cyclical unemployment. So decline in economic activities is the cause of unemployment that we have. Population growth rate that is higher than economic growth rate. So population growth rate is being a cause of unemployment on this case. And then workers who cannot adapt to change and keep up with technological progress may be replaced and become unemployed. So this is workers are failing to adapt to changes is a cause. And then the capacity of the economy to create more and more job opportunities is a cause of unemployment. If the economy do not have the capacity to create more job opportunities, it becomes a cause. So this is what we have. Then we go to next question, which is the last question, which give 2 ways to combat unemployment. So the ways of combating unemployment, we are saying job creation can be one of the causes. Okay, so it can be a solutions to unemployment, housing, economic growth, education and training, unemployment insurance, wage subsidies. So basically, we're looking at unemployment, subsidies. You'd see that when you look at unemployment insurance basically funded by the government. So we are saying government provides short-term financial assistance to workers who lose their jobs. That is the unemployment insurance. Remember, we've got the UIF, which is the unemployment insurance fund. That's how the funding is raised, which is then later extended to those that lose their jobs. So in that case, we are trying to reduce the effect of workers that are unemployed. Then looking at wage subsidies. Wage subsidies, they are obviously a part of the government expenditure again. And then this is basically financial assistance given to employer by the government to reduce the overall wage bill. So the employer obviously is the business of the company. They are given a certain amount of money in terms of financial assistance so that their wage bill is reduced. So when their wage bill is reduced, it means they have now the capacity to employ more workers. So in that case, unemployment is being reduced. So when the wage bill is reduced, it is in a way incentivizing the employers to hire more workers. So that's the basic line behind wage subsidies. So basically, this is what we've guys concluded with this video. Thank you for listening, and hopefully the video was helpful. And we'll meet again in the next video. And let's not forget to subscribe and share.